Just a quick question on
Mhm.
this. Point number one, where your win versus loss percentage. What's the typical percentage win which we get in market? In a rating scale of 1 to 5, 5 being the highest, where would you place TCS and where would you place Bajaj Auto?
1, 2
What would
days,
be
and
your stop loss, Leos? Hello, Namaskar. Welcome to yet another face to face. This time it's face to face global. Guys, I just recorded a face to face with an amazing personality. I think he's like a boy next door, someone who is very down to earth, very simple, yet doing amazing work as a trader in financial market. The idea of recording these face to face global is not just to give you a global perspective of what big traders outside are doing, but also help you to understand their theories and application of their theories in Indian markets. All my global face-to-face experts, I request them to look at Indian charts, to look at Indian market and explain their theories with those examples. So in this face-to-face also, our expert has taken a lot of examples of Indian stocks and explain his theory of trading the market. So this is going to be very exciting face-to-face. I'm sure you're going to love it. Of course, it's an English face-to-face because he doesn't understand Hindi, because he's from a country where they don't speak Hindi. So I hope you'll appreciate my effort on recording this face-to-face. And I'm sure if you like it, you will share with your friends and family. So let's welcome for this face-to-face our friend Leos. Hello everyone, welcome to Face, yet another Face Global, yet another rock star, yet another full load of learning. This time we have Mr. Leoš gracing the occasion and helping us to learn the art and science of trading. Leoš, welcome back.
well, thanks for having me again. It's my pleasure.
Right. So guys, if you have not known about Leoš, I think you should see that video which we made live on Thursday about him. Truly an inspiring journey, truly inspiring. I made a lot of notes. How I need to become a better competitor, a competitive person, how I need to become a better athlete, how I need to become a better trader, how all these things are related. Leoš shared with me. So please do watch that video about Leoš. It's just a 10 minutes video. All right. So here we are, Leoš. Let's get dwelling deep into our strategy. And I guess you have a lot of Indian examples to explain my Indian learners how your strategy works. So you can do the screen sharing and we can start the journey.
Yeah, let me share my screen. Let me know if you can see my screen.
Yeah.
Yeah. So I prepare here just a little presentation to kind of explain what I do, what are my techniques, how I approach the trades, and we can quickly go through it. And later on, then we can jump to some examples of Indian names. I think the Indian market, might be open now.
Yeah.
I'm guessing. So we can also look at the live action, how the names are progressing, and it's gonna be interesting.
Yeah, good. Looking forward to it.
Good. So to summarize again, just quickly, I was born in Czech Republic. Then I spent several years abroad. And about 4 or 5 years ago, I moved back here to Prague. So if anybody wants to come to visit, you're welcome. I come from an athletic background. I've been playing sports all my life. Then in my university, I became an engineer, studied at Technical University, and I started trading basically when I got my first job, when I received my first salary. I was thinking about moving a little bit of assets aside and try to get more into this trading world. And since then, I stuck with it. I went through the several trading platforms, teaching platforms, and also currently I'm a member of the Champion Team Trading by Leif Soreide. When we talk about my trading as such, one thing that I've done somehow since the beginnings maybe without even knowing this is a thing. Maybe I think I might have read it in William O'Neill book. But what I've done since the beginning is tracking my key metrics. It means mathematically tracking how my trading is progressing. It means tracking my win percentage versus loss percentage. How many successful trades have I taken? It means batting average. Is it 50%, 60%, 30%, and so on? And average days held. How long I hold winners. How long I hold losers. What are the ratios in between those? And what I specifically look at mostly is the R per trade. It means risk reward ratio. It means if I compare the winners versus the losers, what is the ratio between them? So let's say if I take 10% win and 5% loss is a 2R trade.
Yeah.
Ideally, I would be want to aiming for 3R plus, which gives you even more mathematical edge. But this way, if you just focus on that and compound the trades over time, mathematically, if you just do 100 trades and you multiply it, you will see that those returns are huge. So this is why I'm trying to focus and build this mathematical edge. And what comes with this tracking is also being able then to do your post analysis and look at your trades that you did. Usually I would let the trades settle a little bit, and keep it in my spreadsheets for several months, because there might be a little bit subjective, say subjective thoughts in your mind. If you close maybe a bad trade, it might be a little not ideal to look at it right away. So, let it sit maybe for a few months, then come back to it and study your results, what you did right, what you did wrong. What I would highlight here, that taking a loss is not a bad trade. If you followed your stop loss, you took a loss, it's a correct trade. Learn it as it worked perfectly and move on.
Lovely. Just a quick question on this. Point number one, where your win versus percentage, loss percentage. What's the typical percentage win which we get in market?
It really depends on your style also, because there might be traders, for example, David Ryan or William O'Neill, would be really trying to focus on holding the names throughout the whole uptrend, and they might be focusing on 50%, 80%, 100% in the best names, while keeping the loss maybe to 7, 10, 12%. I trade a little bit on a shorter time frame. So my holding period for winners is about 15 to 20 days.
Okay.
But for losers is about 3 to 5 days.
Okay.
And my currently my average win is about 8.5%, 9%. My average stop loss, it went up a little bit in recent months, but it's about 3.5%.
Okay. Okay.
Then of course, then you might have even the day traders then who operate on a completely different time scale, right?
Sure.
They might be scalping for a 2% gain and 0.5% loss in a matter of minutes.
Sure. And if suppose you have executed 100 trades, how many will be right? How many will be wrong?
I would say on average about 50%. The batting average, mine is currently about 55%. Was earlier in the year when the going was good, was above 60. But it comes with the fact of building in the failure in your trading.
Okay.
If you start getting the losses, then mathematically your edge is moving a little bit. So maybe you might have to cut your losses a little bit more. It's very possible to have a batting average of maybe only 33%.
Okay.
And still be winning. If you minimize your loss, but keep the win rate as it is, you basically increase this risk reward ratio. So when you multiply it by this batting average, you are still getting that mathematical edge.
Okay, fair point.
Then regarding the selection criteria, what I focus on stems from Stan Weinstein stage analysis, and then later on also developed more by Mark Minervini's trend template, which basically focuses on the names which are in a clear confirmed uptrend. I'm not trying to bottom fish. I'm not trying to pick up the value names and the cheap names. I also know I will never sell at the very top. I'm actually very bad in getting rid of the names on the top. I'm just trying to basically hit that sweet spot in the middle of that uptrend. Sometimes I might trade more around the position. So I might trade a couple times, maybe for 10, 20% loss, few times in that uptrend, but I'm really not trying to pick any extremes. And what do we mean by the uptrend? Uptrend, it's quite simple. Basically, you look at a 200-day moving average. Is it trending up at least 1 month, but ideally, let's say 4 or 5 months? That would be a really confident uptrend. Usually, you will find out when the uptrend is increasing that 100-day moving average is above 200-day. And ideally, I would like to see the stock price above all the key moving averages. It means 50-day, 150, and 200-day. There might be some exceptions to that 50-day rule, but we can discuss a little bit later. And then we go from this aerial view into a little bit more detailed view. What I look in for the actual entries. Then if I look in the base, ideally to the right side of the base, I want to see volume dropping and the tracking. So it means that the volatility is, let's say, getting dried out from the name. The sellers are exiting the name, and there is really the supply resistance level is, let's say, on a thin line. When we break out from that name, there might be a lot of explosive movement going up. Ideally, I would like to see names within 25% of their 52-week high. It comes with that strong uptrend. It comes hand in hand. And yeah, as I said on the breakouts, I want to see some power behind it. Usually in the textbooks, we will find that the ideal breakout is a volume increase on the day of at least 40% above the 50-day moving average volume. I found out for me personally, this is not a very strict requirement. I found out when I studied the charts that sometimes the volume might come later, 2-3 days after. So if I don't see that volume right 2-3 days after a breakout, it's not necessarily a sell signal for me. It's more kind of a red flag. I would probably move my stops a little higher, or maybe I would reduce the position a little bit, but I would be mindful of this.
Sure.
And regarding the people might ask regarding the fundamentals, because certain styles are focused a lot on fundamentals. Some people screen a lot for the fundamentals. For me personally, the fundamentals are not the must, but they're a key factor. If I see let's say if I see two names which technically would be exactly the same, then of course I would prefer those where the fundamentals are in place, and it kind of helps me to build conviction to hold the name longer. If I get into a name which doesn't have a fundamentals, I would probably be inclined to take profits a little quicker. And what do we mean by fundamentals? Usually I look at three key things, which are earnings per share, sales, meaning revenue, and fund ownership. Regarding the earnings and sales, what I would like to see is quarterly, year-to-year increase, ideally by at least 20 to 25%, yearly somewhere, ideally also 20-25%, but at least those 10 to 20%. And then I'm looking at fund ownership increase over the last 3 to 12 months, roughly. And regarding the fundamentals, also what I discover is also the themes. People often talk about the themes. Themes don't have to be necessarily just the sector. That's one strong requirement. You will always see, let's say, recently we had the AI hype, all the names which are related to AI, they're somehow increasing, but you will find leaders lead. So you had, for example, in US stock market, it was NVIDIA, SMCI, and then later on, you had some other names in the sector that kind of followed the leaders in the group. So I would be trying to, let's say, identify of what's working and try to focus on that. And with the themes, it also comes the technical themes, because you might have those as well. Sometimes you might have let's say, pivot somewhere lower in the base. Sometimes you have a high handle somewhere in the base. Sometimes you might have pullback buys which are working. So also try to find out what's working in your trading from a technical point of view too.
Amazing. Leos, I'm so pleasantly surprised to see that this is exactly what I do. I mean, this is the beauty of universe is so lovely that two people doing similar kind of a thing, but have developed that model on their own understanding of the market. This is exactly what I do, and I love the setup what you have created.
I think it's a holy grail. I think, yeah, it's honestly it's not that difficult. I know it's easier said than done,
Yeah,
but if you look at my list here, it's few bullet points. Just try to focus on these. Try to start simple. Do not
yeah,
overcomplicate it. You don't need 10, 15 indicators and signals to build a conviction in.
that's right. That's right.
So yeah, if you would like also to go quickly to my screening process, I can go quickly through it too.
Sure.
What I do, what's my routine, daily, weekly. So what I've done, I've kind of built my personalized watch list. I have several categories. There might be a few hundred names, which I go through weekly. I take some names out, then I run my screens. I take some names in. And this way I can really focus on how, let's say, my names are acting.
Yep.
Honestly, for me, the general index, I'm aware of it, but it's the lowest priority in what I do because those names will always lead me to how the names groups are acting. So yeah, I review those on the weekends during the day because I also work full time and I don't necessarily have time to go every day through hundreds of charts. So that's why I split it into like 4 categories. And daily, I will maybe look if I have less time to look at my top
Yeah.
the day before. I do not try to call audibles during the trading day, but really try to premeditate everything the day before. And regarding the screening on the weekends, I have several screens. Some of them are very simple. Some of them, there's a little bit more nuance behind. If I start from the simple ones, I might look at recent IPOs, or I might sort the names maybe by increase on price on higher volume.
Okay.
Or I look for the high tide flags or so-called power plays. It means when there is basically high tide flag is defined as 100% rise in the price in last 40 days. It's
Mhm.
definition by book. So if I run a screen of 3-month price rise of 100%, it might pop up. I usually try to disregard some cheaper names like less than $8 to $10 because lower price, especially on lower volume, means there's really no interest of funds, and it might be just more speculative. And from the groups as such, I mentioned here cyclicals like banks, oil and gas, steel. I put the lowest priority on them because personally, it comes also with that post analysis. I haven't really had a success or good trading results on trading those. That's why it's kind of a filter for me that, at least it presents me a little less names to go through. And I guess the most important criteria is the trend template, which we discussed earlier when I look at just the strong uptrends, trending names.
Okay.
When I run this on the weekend, at the end, I will get usually people ask also like, how many names do you have to go through? 5,000 names. It's really not true. Like this way, I can look at maybe on the weekend anywhere between 300 to let's say 2,000 names.
So every weekend you go through 300 to say 2,000 of 1,000 names and look at their chart, right?
Exactly. And with the softwares nowadays, it's pretty easy because you don't have to, you don't have to go to newspaper and study everything. You can just
Yeah.
go on a software and with 2 clicks, you can just go through it. And then you build a habit because you will see that, maybe some name doesn't have a pivot or base developed. So you just automatically skip it. You don't necessarily have to study and mark everything, just see if something's there. If not, go to the next one.
Amazing. Leos, just to inform you that we have a platform called StockEdge in India, which has almost 4 million plus download. And a lot of people use StockEdge to filter stocks similar to what you do. In fact, I have a combination scan which takes care of the some of the pointers which you have mentioned there. So it is pretty much the same process which I also try to follow.
Very good. That sounds great. Yeah. And then the last thing regarding the screening is the last part, which I said. When you go through the names, what to look at in terms of the actual name. So I always start from the, let's say, right of the base. I'll be looking if there's any formation, like any pivot forming that I could potentially enter the name. Like are there any handles or some, let's say, lower patterns, lower in the base. So by Mark Miner's we need definition, low cheat sheets, or is the base still just, let's say, in a formation, it still needs time. And in terms of entry, I would be looking for inside days and volume contraction to really to highlight that this supply level has diminished. There are no more potential sellers left, and there is a high potential of a breakout upcoming. Of course, if you have I have here a note, if you have a small undercut shakeout, it sometimes might be useful because it kind of helps to shake out the last big holders. But personally, it still needs to be a manageable range because I use quite tight stops. So I would be looking at least still somewhere from maximum, maybe 5% in a pivot.
Okay.
And category on its own are already mentioned high tide flags, which are by book definition, it means 100% plus move in 40 days, followed by correction of maximum 20 to 25%. Usually the base is at least 7 to 10 days, ideally maybe 2-3 weeks. Why I like these setups are because you can get a lot of quick power behind it. You might get in very short period of time, you might get some explosive move, which helps you also not necessarily just to, of course, capture your gains, but also really you have more leverage than what to do with your risk if you take some partial profits, if you move the stops up, or how you handle the trade.
How do you identify these patterns? It's you scan manually, or there are softwares which helps you to identify these patterns.
Nowadays, in the market search that I use, they also have this the algorithm which marks the patterns, but I don't use it that much. Normally, it's just, let's say, the manual look and feel, because very often you look in the base and you kind of see if it's looking okay or not. Then if you're not sure, then you can quickly measure maybe the percentages, depth of the base, length of the base, but otherwise it's just a manual process.
Sure, got it.
Then a little bit topic on managing my positions. I usually try to size the positions basically with very tight stops, and it all comes down with your recent success in the trades. If you didn't have a success, you can always start very small. My usual position size is somewhere between 20 to 25% of my account.
Okay.
But maybe same like recently. Recently, I had not very good few months, so I went all to cash and actually just like 2 days ago, I was getting back in, and I started maybe with 6% positions, 7% positions. Yeah, if I have some success, I try to scale up to 15%, 10, 20%, 25%, or maybe even go overweight to in the competition account, maybe even up to 50%. But it's, I would say, warning sign. It's really for advanced traders because you have a lot of risk with that.
Is it per stock? 20, 25, 30% per stock?
Per stock, yeah. So usually I hold somewhere between, if I'm 100% invested, I will have somewhere between 2 to 8 names.
Oh.
People ask me about it. What I also have, if I have success, I'm saying it's 2 to 8, let's say, full names, because what I then also try to do becomes I'm really bad in selling all my position into strength. So I would maybe keep for some names very small position, like 3%, 2%, just to really stay in touch with that name. And then I have what I call a basket of these free rolling names, which are just very tiny positions where I move my stops, I took the profits, but I'm just trying to maybe just, stay in touch with them and keep them for the long run.
Okay. Interesting.
And with the term free rolling, it comes with taking the partial. Basically, what it means, it's another way of de-risk your stop, because de-risking doesn't mean only moving the stop. It also means taking some partial profits. It means you booked some gains. This way, basically, you already decrease the mathematical stop. If you take, let's say, if you have a 5% stop, the name moves up 5%, you take half of your position down. Then if you get stopped now for 5%, it's actually 2.5% from the original name, right? Because you already took 50% off. But there are various ways. What you can also do, you can just let the price rise, move your stop up to the 2.5%. You don't have to really take anything at all, or you can do a combination of that. What I often do, I often take maybe not the half position, but maybe 25-30%. I move my stop up around some technical points, moving averages, low of the base, low of the pivot, and so on, and try to manage it this way.
Interesting.
And my last slide, I think the most important factor of all is the risk control. That's why I try to also put here this picture of a fighter jet, because I think it really symbolizes us as a traders. You have to be disciplined. The stock market is a beast, same like fighter jet. You really need to succeed. You really need to have a focus and stick to your control. If you let the fighter jet just to fly on autopilot, I think it's gonna be a disaster. You're gonna either crash or somebody's gonna shoot you down, and it's not gonna work for you. So really try to stick to your rules. It comes down to what we discussed before about how to train your mindset. Also, in my past, how to stick to your rules. I tried various things, maybe just mark in Excel sheet today. Did I follow my rules? Red, green, yes, no. Or put sticky notes on next to your bed saying, yesterday I didn't follow the rules. Just try to build this mindset into your head to following what you do. And always, cut your losses, protect your capital, because it's always easier to recover from a smaller loss than a bigger loss. This, I guess, the math behind is mind blowing. Like I mentioned here, if you take 25, when you get around 15%, 10%, then the gain mathematically starts turning around you. Like if you take 25% loss, then to get break even, you need 33% gain. If you take a 50% loss, then you need 100% gain. And ask yourself, how many of your trades were 100%? It's very difficult to get. So manage your losses. Protect your capital when the going is not good. At least you will clear your mind and you will be ready when the next uptrend comes. And you might be the star of the show. So
This is amazing, Vip. Amazing slide. Please allow me to use this slide. I'll give credit to you in my presentations. I want to use this
absolutely.
slide.
And go for it.
Thank you.
I'm happy to share it with you.
Thank you. Thank you so much. And I want all my learners to take a printout of this one and keep it on their desk, because this is actually the holy grail, which we have discussed.
Absolutely. Yeah.
Great, Leo. So let's discuss some stocks. I think our framework is well set. The way you have defined it for us step by step is amazing. Now we want to see how you look at Indian stocks. How do you evaluate Indian stocks with this frameworks which we have just discussed?
Sure. Yeah. So I can start the trading view here. Let me see if you can see it.
Yeah.
Yeah. So we will go through several names. I have here the list on my other screen. So sorry if I'm looking away for a bit.
That's okay.
We will go through it. I
Yeah.
have here some small writings. I will always try to make it bigger so it's better visible.
Yeah.
But yeah, I start small so we can go through it step by step.
Okay.
What was very interesting for me going through these charts is because I don't necessarily understand the fundamentals or the story behind the name.
Mhm.
So it was a very nice exercise to look only in the technicals, it's
Yeah.
actually funny to see that in some of the names you kind of get a feeling of what the name is, probably because sometimes maybe the banks, they very often act similar and so on.
Okay.
And I was actually surprised that some of the names are looking very good. That some of the names, I think, compared to US market, there might be even less volatility, better setups. So it was very interesting.
Yeah. Yeah.
So when we start going through it, the first here is the Tata Consultancy Service.
Yeah.
Uh, so when we look at it, the base by itself is pretty loose, I would say, because there's no well-developed pivot. However, we have here the clear line of resistance, and what's very interesting to me here is this pullback to that supply level into that resistance.
Yeah.
And it's yeah, make or break. Here we can see it's kind of a wedging up, and either it will succeed, it can break the resistance level, or it will break down. What I
Okay.
have here, the first thing is we can see here it was we have here the first pivot, which is for my personal liking, it's a bit too loose.
Okay.
However, we can see there was a nice shakeout. The after earnings pivot, I think you could, if you get on somewhere here, you have a good risk reward ratio, you have a huge volume coming, and logically, the name needs some digestion after such a sharp rise from the base. So that's what we logically got. As I'm saying here, I would expect that pullback, especially given this gap down here, several days of some basing. I actually marked it here on Wednesday. I mark here behind some blue ticks that I would like to see how the node is progressing.
Mm-hmm.
So far it's doing exactly that. And
Mm-hmm.
maybe ideally we would like to see a little bit more tightening because we can see that volatility increase. There's gap down, gap up. So ideally, if we get some pause for a few more days, I think it would build a perfect high handle here.
Super.
Uh,
While
then I'll
while you're
skip.
discussing the charts here, I'm also looking at the charts in my other laptop, so I may not look at you directly, but just a confirmation while you're discussing this, I'm looking at this, and if I'm finding trades interesting, then I probably take some trades as well.
Then I have here my 4 favorites, and then we can look at the other.
Sure,
So
sure.
I'll start with that. There was this name, Bajaj Auto, where
Yeah,
we can see, if we look at the weekly chart, it's clear uptrend.
yeah.
We have a very nice up trading movement. Only thing what we're missing here is some rubber base. So I know it's a very it might be difficult to see the name go without you, but you really just try to stick with it, look for the base in the name. This is what we eventually got. There was a first bay here, where you could, I think, easily get on with very tight risk. If we measure it, it's about 9% base. That's perfect. Flat base, picture perfect. And now we're getting kind of base on base pattern, which can be even more powerful. I saw here in a lot of these names, there was this strange day on the index. Also looked up what it was. I think you had some election or some day, right? There was a lot of these names in July had this 1 day shakeout.
Yeah.
But here it's not an extreme. It's even with the shakeout. It's what it was 8%. It's a little bit more, but nothing too extreme. So we have here a very nice, again, flat base with even the shakeout in the base forming, holding the 50-day moving average, price rising above the technical levels. And here, if we look at it even closer, then we can see exactly what we want to see, the tightening in the price. So you can see this triangle here forming the volume contracting on the selling days. A little unfortunate today that it's not breaking out. I would expect when it pokes its head that it starts going. So maybe if we get 1, 2 more days, it could finally find its footing and
But
continue the uptrend.
Leos, if I have to ask you, because we always have limited money, so we'll have to eliminate based on certain criteria. So if I can ask you that between TCS and Bajaj Auto, which one you think has a higher probability setup?
Mm, higher probability in terms of succeeding, I would probably say this one. However, uh, yeah, given the price, I think it might be what I would call a slow mover. I don't think, also given the basis, there's not much volatility. I would expect that you will not get so much juice out of it. I think you might get a few percent, but it's definitely not going to be like this typical growth names where you would get 20, 30, 40% in a short period of time.
Mhm. Okay. So you will probably see more stocks uh, to figure out that if you look at 10 stocks, then probably you will invest in two, three. So if I have to, take some numbers from you that in a rating scale of 1 to 5, 5 being the highest, where would you place TCS and where would you place Bajaj Auto?
So the TCS would be somewhere, I would say, 3.5,
Okay.
4. It's not perfect. There could be a little more pivots in that base. Uh, this one, I would say, is closer to 5.
Okay.
Only downside is, yeah, let's say that potential. On the other hand, here you can get very tight stop. Yeah, if you put your stop here around those technical areas, that pivot is maybe like 2%. So
Okay.
if you're aiming for a gain of only 6%, it still gives you this 3-to-1 trade.
Got it. Got it. Got it. Yeah.
Then we have here this petroleum stock. As I said in my one thing I said in my interview, I don't really like oil names. So yeah, just from my personal liking, I would probably not focus on it too much. However, technically, I think it's shaping very nice and it has a good potential. You can see here, first thing we see here before already, there was a great entry here on this, basically this inside a absolutely low volume. There is no sellers left right around the supply level. So it's then it started breaking out here. I would be inclined to put even a heavy position here. For me, we could see here the contraction, it corrects here, it starts, diminishing the price volume here a little bit, still a little bit extended. And then if we look at these two patterns here, that's a great entry for me here on this last day. However, simply did not work. I don't know the background behind, but that's what sometimes happens. You just have to take a loss, move on. And it started recovering here. What I noticed at some of the names, after this day they started just to wage up a little bit. So there was really no time for the stock to correct further, which I don't really like. Here we can see, on the other hand, it somehow reached that resistance again. It started correcting. If you want to be really, really aggressive, you could maybe make a case of start buying it here when it comes out of this kind of 50-day pullback buy. But I would prefer just to let it settle a little bit. And this is what we are exactly getting now. It confirmed the uptrend, continued over the resistance. We have these sellers who were trapped here, and probably a lot of people got trapped here and they were just waiting to get break even after this dramatic sell-off. I think they might be gone, and just the strong heads holding the name above the here 10-day, 20-day moving average. So I think here, I said here a few days ago, even potential pullback buy out of this 20-day moving average. So I think you could even make a case to start buying of these moving averages. But ideally, if it may be, again, pauses here for one day, maybe go 1-2
What would
days.
be
And
your stop loss, Leos?
so stop loss here, if it would go like this, what
Yeah.
I charted here, then I would be looking around these technical areas of that. Ideally, here is what I like a lot, because we have the pivot, we have the key moving averages like 10 and 20-day moving average. So my initial thought would be here, this about 4.5% stop just below the base. If somebody is a little more longer term and they use a little wider basis, maybe they aim for higher gains. You can even you don't have to take just one stop. You can always stagger the stops, right? So you can take 5% here, and then you can put your second half stop here on the moving averages of maybe 9%. This way, mathematically, you get 5 and 10. That's 7.5, 7.5 on average. Very acceptable too.
Okay, interesting. That's a very interesting way of identifying a stop loss.
Then we have here.
By the way,
HCL
BPCL,
Petrol.
Bharat Petroleum, it's an oil company and it's also a public sector enterprise. So that's why the volatility in these stocks is high, because it is dependent on commentaries from government.
I see.
Yeah.
Very interesting. Then we have here the technology company, HCL. A little bit on the first look, it looks a little bit white. It's about, if we measure it, it's 26%. It's not that dramatic. Usually I would be, if the base is 40-50% deep, then I would really require a lot of time to heal, because to 50, as we discussed before, 50% down means 100% up. And if you have a name that rises 100%, there's a high chance that it will have to form another base and so on. Here, 26%, not bad. I mark here that the price follows the volume, or the volume follows the price, whichever way you want it. You can see here that there is a sharp drop in the left side of the base, and as we go further to the right, the volume starts decreasing. Here, especially what I'm looking in the bases is that kind of this midpoint. If you look at the midpoint of a base, then in the right side development, you want to see ideally more volume on up days, less volume on the down days. And this is what we are getting. We have here the rise, which is, if you look at the red days, there's almost no red volume days in the base. Very nice.
Yeah.
And starts rising into this resistance. I like the term that Leif Sorede came up with. It's kind of, calls it frozen rope. It just continues higher without any stop. And it starts forming the handle right around that resistance supply level. So if we can get a little more time here, I think it's still, the handle is a little too wide. But if we can get here maybe one more contraction, this way also the 50-day will catch up a little bit more. So if we get maybe one more week, it would be perfect entry here.
Beautiful.
And then the last...
Your analysis is like a butter. It's so smooth.
And the last I prepared here from the ones that I liked was this pharmaceutical. I don't know how is it in Indian stock market, but in US, the pharmaceutical biotech, they're very often missing the fundamentals. If you have a name with revenue, that's a plus, but most of the time you're just trading on technicals, and you have to be very mindful of the risk. Because if there's some drug approval that doesn't go through, some trial which is not successful, you have this huge risk of some dramatic gap down. So just be mindful when you position size into pharmaceutical names.
India market is largely a generic market. So it is not, we do R&D, but most of the time, most of these companies are generic in nature. So whatever patented drug is getting off patent, Indian manufacturers starts manufacture them and sell it globally.
Oh, even better. Then in that case, this technical analysis on this name is picture perfect. Okay. If we have to rate it here 1 to 5, this is a picture perfect 5. We have several clear entries. It means there is no unnecessary rise that we would have to wait for some digestion. It kind of steps higher. If you are a person who scales up into positions, which some people do, sometimes they choose one pivot, they move to the next one. This is what we are exactly getting in that base. We have here again some correction. It drops below the 50-day. It finds the 50-day moving average support. The 50-day flattens up. So it's not anyhow extended or anything. If you look at the long term, it's a very nice uptrend too. And we get first entry already here. This, you see that supply level around the 50 moving average. You have here this kind of a low cheat handle, these few insiders of that volume going down. The breakout could be higher volume, but since it is low in the base, I think you can start here maybe 25 positions, start building up. You finance the risk for your next entry and move on from there. This is picture perfect entry here. Again, we have very small correction in the handle. It's about 3%. That's an amazing risk ratio. Volume, almost no selling volume. I see even declare dividends here. And look at that breakout with the follow-through buying. You have a break, it pokes its head here. As I said, I don't necessarily require the volume on exactly on breakout day. And look at then 1, 2, increasing volume follows the price action. Beautiful. And what we are getting now, we're a little bit extended. However, it's not that bad. Now, actually, the 20-day moving average is already starting to catch up. We got about 1, 2, 3, 4, 5 tight base days. It's it can be considered what's by O'Neill's definition 3-week tight. So it could be very nice add-on entry, or if you're not in that position, I think you can even enter here with some smaller position here.
Interesting. Now, I want to put you in spotlight. I want to give you 4, 5 stocks which I may be holding, okay? And you need to give me your analysis.
Okay.
I mean, for my benefit of learners, I must tell you that we didn't discuss these stocks, which I'm going to share with him right now. So, Leoš, my first stock is Indus Tower, INDUS. Can you search for it? INDUS, Indus Tower.
Oh, sorry, it's
Yeah, this
Tower.
one, Tower. Yeah.
Oh, so I do not see entry at the moment.
Okay.
There's need time. Oh, very nice. It's just starting the uptrend, so that's very good. That there's I would say, potential to hold it for at least medium or longer term, because you just started here. If you look at the 200-day moving average, it basically just started to trend up somewhere. Oh, we look at it somewhere, could be here the inflection point of the 200-day moving average. It just starts going up here. What I mean is, see that 200-day starts going this way.
Yeah.
You have the 50-day moving average above that. Very good, starting the uptrend here. This is kind of actually the first real base in an uptrend. So there is still a lot of potential to go further. I don't like so much here the volatility. It's 20%, then in 2 weeks,
Yeah.
10%. It's personally for me quite a lot, but what I like is then here this development is you could make a case of buying it maybe here on those few days, because this is a nice shakeout. Yeah, actually there's some, for me, unknown reason to try to push the price down, but it finds the buyers.
Yeah.
It finishes almost at the high of a day,
Yeah.
which is very nice for me, and it starts just holding this almost 50-day here. Not much volume there, so you could make a case of try to enter somewhere here for this about 5-6% loss. Not bad. You have, what I like here is if you enter in this position, you have also then option, as we discussed, the de-risking. If you look here, you have a 20, 50, 10-day, 20-day, 50-day on the same spot. You can quickly, if it starts advancing, you can move your stop somewhere here.
Yeah.
And you're basically in free money, because if you entered here, almost no stop. And I like this entry here. It's actually some kind of a first real pivot, kind of a high handle. We see here not much selling pressure, and you could make a case of trying to enter here. Here I would, yeah, here it needs time. It needs like this, I think, several weeks to little flatten up and build up maybe another what I call natural reaction or a new base. But otherwise, overall, I would say very nice name.
Okay. Um, let's talk about CDSL. CDSL. Yeah. So out of 5, how much you will give rating to Indus Towers?
Almost 5, I would say, 4.5.
4.5. Okay.
This one, who I'll be curious where you enter the name, if you hold it for longer or not. It has also up the clear uptrend. Yeah, we see 20-day, 50-day move, flatten up here, and it formed here kind of a, how would I call it, base on base with some undercut. It kind of, you could make a case of thinking that this is kind of a topping pattern, some head and shoulders here. You know, if you look at it here, it's kind of here, then it tapped the here name, then it started rolling over here with this right shoulder, and if it rolled down in this scenario, it would be here. If it had this bounce and roll around the 50-day, if it started rolling here, then it would be disaster, and I think we would go to downtrend, so it would be really bad. But it actually formed quite a nice entry. It was sharp recovery here, and it found that it found this resistance level in that area, even somewhere further here. We can see even further here to some support level, turns into support level here. So it forms the actual okay pivot here where you could enter. And now it's just, if you hold it for long term, I think it's okay. For me personally, this is too much volatility and I wouldn't know what to do in that name. Because we can see up, down, up, down, up, down. So 3 to 5, I would say maybe 2.5.
All right. Great. Amazing, Leos. This was very exciting. It was fun doing this with you. And you have this amazing persona, which is so calm. The demure is so amazing. So that's, I think, the hallmark of a successful trader. And I really enjoyed in recording this one with you. Would you like to conclude before we close this one? Would you like to share some more points of wisdoms for us?
Yeah, I can say a couple of words, I would say, and as I said in some other talk, never give up. I know it's hard. I've been there myself. You know, we don't ever start with with a golden platter, but it takes time. You're not gonna be successful overnight. So if you're in some downturn, do not give up. Keep learning. The things will turn around eventually. I have a great example. Me personally, if you're in some downturn, I just posted on X yesterday. In my last quarter, I had 27 trades, and out of those were only 4 winners. I racked up 23 losses in that period. However, if you manage your risk, if you build the failure into your mathematics, eventually there's gonna be one trade that's gonna change it. For me personally, it was also one trade that I traded a couple times, and all those 27 or 26 losses were back to break even. So do not give up. Few trades can change your life.
This is so nice. Few days can change your life. This is amazing, Leos. Really excited to know more about you and love to be in touch with you and keep on getting inspired from you. Thank you so much for this amazing content.
Thank you.
As they say, namaste in India. Thank you so much. Bye-bye.
Namaste. Bye.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.